Welcome to the Techno Fundamental Report for October the 16th. Without tech, the U.S. economy would have been close to a recession. So what they're saying here is GDP growth rates, excluding tech spending, would be close to being negative. So the technology stocks are very important to the economy right now. It's really the only thing going on. The greatest mistake you can make in life is continually fearing that you'll make one. Albert Green Hubbard. He was a writer. He also mentions that he was his big business was he was a book publisher, and he did these beautiful books. Genius is often only the power of making continuous efforts, so stick with it. Warren Buffett, we don't have to be smarter than the rest. We have to be more disciplined than the rest. So what he's talking about here, in my opinion, is if you've got a big ego and you can't accept the fact that you've made a mistake, it's the most expensive emotion is the ego. Read this if you would, but Jesse Livermore's career was a constant battle between his remarkable analytical abilities and his personal ego, with his spectacular successes often followed by dramatic ego-driven failures. As you read about Livermore, you're going to see a lot of talk about mathematics versus human opinion. And when it comes to the market doesn't care about you. It doesn't care about me. So you have to listen to the market because it's basically the boss. Now, we're starting to see some kind of disturbing signals right now. Not bad enough to be too concerned, but I'm concerned. I think the market is starting to show some signs of either exhaustion, just being tired, or are we going into correction? But this indicator here, which is the number of new lows on the New York Stock Exchange, we get concerned if that number gets over 40. And as you can see, just 3 days ago, we got to over 120 new lows. So it's basically what this is saying is that the sellers are starting to come in. Now, this could all change tomorrow, but let's take a look. Now, what I do is I look at 5 indexes. And the reason I do that is I want a broad picture. You know, when you just look at the Dow Jones Industrial Average, you're talking about 30 industrial cyclical companies that really doesn't represent what's going on. It's still important, but it's not the most important. So here we have the NASDAQ. You can see that last Friday we had a very disturbing drop here on, let's see, 1, 2, 3, 4, pretty high volume, and then followed up with high volume again. All right, so the way I've got this set up, this is the 25-day moving average, and this is the 50-day moving average. And the rule is that if the index breaks below the lower moving average, and that lower moving average turns down, that's a sell signal for that particular moving averages. But we're going to look at 5 indexes, and the rule is, again, 3 out of 5 have to do this. So let's look at the next group. This is the mid-cap stocks. You can again see that disturbing drop on Friday on fairly heavy volume, recovering somewhat, but still below that upper moving average, but is holding. So that is what we would say on the fence. The New York Stock Exchange, again, you can see the big drop, trying to pull back above the upper moving average, which it did today, but I would say this is still on the fence. Here's the small caps, basic, big drop, came back above the upper moving average, still looks on the fence to me. So I would not recommend getting super aggressive right now. S&P 500, same thing, on the fence. So we've got basically, my indicators are just saying we're kind of neutral right now. Now, the primary trend is still up. So as far as this being a bull market or an uptrending market or a good market, whatever you want to call it, both indexes are above the 200-day moving average and are continuing to trend upward. Now, if we start seeing a low and then a lower low and then a rally, which is a lower high, and then we get a lower low. We're not in uptrend anymore. That'll be different. Now, the aggression index, as you can see, where we're comparing NASDAQ to consumer staples, we hit an all-time new high here, pulled back on Friday, and getting somewhat of an anemic bounce. Interest rates continue to be okay. We're starting to see where interest rates continue to trend down. The power index continues to be in positive territory, which is under zero. So interest rates are not out of control here. I think we're in pretty good shape. Now I want to talk about gold. Everywhere I go, I run into people all the time, gold, 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 Bitcoin, 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 whatever. My point is, if you look at this graph, you see a parabolic move. Now, what I'm hearing is that these are central banks around the world that are buying gold and hoarding gold. But let's go back and kind of look at a truer picture. What I've done here is I've taken the price of gold compared to the S&P 500. You see, the problem for me with gold is number one, it's a non-producing asset. It's not really an investment. It's just a metal used primarily for jewelry, some technology uses. So if I compare gold to the S&P 500 going back to 2011, gold has dramatically underperformed the S&P 500 for an extended period of time. Now, we're starting to see maybe a breakout here that could be somewhat of a game changer. But we're looking at a long-term downtrend that may have what we call a dead cat bounce. So that's how I feel about gold. I'm really not big on it, but a lot of people are. Crude oil. I'm really noticing what's going on in the crude oil market. Oil is now below $60 a barrel. As of today, it's at 58.59, which really looks like a new low. So oil is definitely in a downtrend, and if people are worried about inflation, I would think the price of oil would be moving up. At least that's what happened back in the 70s. I can remember dramatically around 74, price of oil was going straight up. So point being is we've dropped on the price of oil since 22. We've dropped $115 a barrel all the way down to 58.59. So it's been cut in half. Anyway, if you have any questions, please let me know. Thank you very much.